Is last trade bias damaging your profitability? That's the question we'll be answering today. And if you don't know what last trade bias is, this is a video you absolutely need to watch in full immediately, because understanding this will have a huge positive impact on your profitability. So stay tuned and let's get into it. Hi guys, Will here from WB Trading, and as always, welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So I've been working with a trader over the last few months he's going to be the subject of today's video. And to begin with, I need to share a little bit of his story. So he's a profitable trader. He's been making money long term for into the years now. He focuses on just a couple of strategies and setups that he trades really well. And by working together, we've pretty much just been tightening up his focus, tightening up his performance, focusing in on his performance metrics, his statistics, which, as you all know, is something I'm massive on in terms of keeping just deadly accurate and detailed metrics. And one thing that's come up a couple of times now, it's like a cough or a cold. It goes away for a while, then it comes back, and then it goes away for a while again. And I just wanted to talk about it here on the channel today, because I know that this affects a hell of a lot of traders. And that's, again, it's last trade bias. So it's a real performance killer, and it's a real mindset destroyer too. And like anything in life, you have to understand it before you can fix it. So what is last trade bias? So it's a term that I created myself for the feeling that you get when you screw up your last trade, and we all know what that feels like, right? And then when you screw up that last trade, that mistake then weighs heavy on your shoulders during your next trade, and then it happens again, and then it happens again, and it just becomes this huge burden that can really damage your trading. Thankfully though, there is a fix for it, which I'll get into in a second, but first let me give you a couple of examples. So one example might be, let's say, moving to break even. So moving to break even, avoiding a loss, and then thinking, right, that works, I'm going to carry on doing that. But that's the thing, just because something's worked on your last trade, just because it worked once, that's not enough data, is it? That's last trade bias affecting your decision making. Another example might be exiting a trade early for whatever reason. Maybe you're short and there's a really violent pullback against you. You jump out early and then price turns around and heads straight for your take profit. And it would have been a perfect trade. Again, we've all done that at one point or another, haven't we? So then you think, right, I'm never touching one of my damn trades ever again. But again, just because it didn't work on that last trade, it's not enough data to make an accurate decision. That's last trade bias affecting your decision making yet again. So maybe you're excellent at managing open positions. Maybe it's one of your strong points, right? But because of that last trade bias, you're constantly thinking, well, it worked last time, so I'll do it again. And then it doesn't work. And then you're thinking, right, well, it didn't work last time, so I'm not going to do that again. It's all last trade bias affecting your decision making every time. Within trading, there's only really one way to make decisions, and that's via the numbers, via the concrete statistical data that proves and actually reinforces why decisions are being made, right? So here's a quote for you to print out and put on your office wall. Anything that isn't proven is a guess. I'll say that again. Anything that isn't proven is a guess. And that's why I trade using mechanical strategies, because they're able to be proven. They come with concrete data, they come with a concrete proof of performance, the numbers, the statistics. Technical analysis can't be proven. Trend lines can't be proven. Support and resistance can't be proven. And the reason is because they're different every single time. So for example, a support line is in a different place every time, isn't it? The outcome of an overbought or an oversold RSI reading is different every time. The outcome of a trend line that's had 2 or 3 touches is different every time. And by using this stuff you're setting yourself up to fail. You're setting yourself up to suffer from last trade bias on a continuous basis forever. And if you're going this route, you'll constantly be making random decisions based on your last 1 or 2 trades, or how you're feeling today, and so on and so forth. Again, it's last trade bias. So what's the fix for this that I mentioned earlier? And this is the exact same guidance that I share with the trader I'm working with too. So open up your trade record and add in a column for each tweak or each action, and keep a strict record of every time it takes place. So for example, if you move your stop loss to break even, every time you do that, make a note on your trade record. So tick the I moved to break even box and put a comment next to it, just explaining why, but whatever that reason is. When you've done this across, let's say, 50 trades or 100 trades, look back on the data and then assess the outcomes. So did you actually prevent yourself from capturing wins, or did you save yourself from losses? What was the net result of taking that action? So did you save money, or did it actually prevent you from making more money? Again, with that concrete data in hand, you can then make a concrete, proven decision, i.e., yes, moving to break even meant I was further net positive, I was more profitable. Or on the other hand, no, moving to break even meant I was actually taken out of trades that in the end hit the profit target that I'd placed, and so on. Let the data actually tell you what to do rather than just human emotion, rather than just guessing and trying to predict. If you're trading using human emotion, using what we talked about earlier with no concrete data to back up your decisions, you should really think about stopping trading right now. If, however, you have a proven strategy, so for example, if when a setup forms, you know exactly what to do, you're most likely profitable. So obviously, if you are, carry on doing what you're doing. But either way, and especially if you're in that former camp, just build data on your performance, because there's always something to improve on. And if you are in that former camp and you are pretty much trading with last trade bias on your shoulders every day with no proven process, you need to do something about it. You need to put a proven mechanical process in place that you can just follow without falling into those traps of human emotion. Remember, anything that isn't proven is a guess. And consistently profitable traders don't guess. They have a proven process. It's as simple as that. And by the way, my email inbox is always open if any of you need any help with this. I do have an assistant who manages it for me, but anything that needs my attention, anything that comes through specifically for me, gets put in a specific folder that I check myself every day or two. So again, if you are struggling with anything, drop me an email and it'll get to me and I'll happily lend a hand. Anyway, hopefully that's added some value. Hopefully it's triggered some inspiration for you all. Take this away, give it some thought, and again, if you are struggling from last trade bias, use the fix that I provided, use the spreadsheet example, and actually build data on the decisions that you're making. Prove them, and again, if they work, carry on with them. If they don't, cut them out of your trading before they do any more damage. Anyway, I'll leave it there for today, but as always, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks everyone.